Hey guys, my name is Ruben Johnson. In this video, we're going to go over the market. As we had said earlier this week in my Facebook on Saturday and on Sunday, as well as my other YouTube channel, that this week would have a significant pullback in the market. And the reason or the reason we knew that is because a lot of what this week was hinged upon was the stimulus check. And it also was going to be Apple earnings, which is, if you follow the markets at all, it is one of the biggest of the FANG in the tech sector, and the Nasdaq has been traditionally outperforming the market. And so, for those reasons, it was pretty easy to predict that we would see a significant market pullback to kind of retest a lot of the lows. And because the stimulus check was going to be such a catalyst for the markets to go one way or another, so for that reason, and considering the fact that we were going to, like I said, have a significant pullback in the market, I wanted to get into the market and I wanted to get long. And again, if you've been following COVID at all or anything that's been happening in the financial markets during this time, it's pretty easy to see that there was going to probably have a little bit of a delay with the stimulus package. And I also feel that ironically, we could see a lot of the stimulus package actually line up with the earnings call with Apple today. And doing so would significantly show us where Apple would be in terms of the overall supply and demand range and what we can expect for the next few months. So because of this, I got into Apple at a vertical put spread, and the reason I chose to do a vertical put spread versus doing the stock outright is because with the vertical put spread, I was able to get a better break-even price, and I am also protected from a significant downturn move in the overnight session, meaning that because I have a protective put on the vertical, if the market were to free fall the following day, I would actually have a stop loss in the form of a put that I would have purchased. And so, just as expected, we had a significant pullback on Monday. And then we had a bounce on Tuesday with the Pinterest earnings and what have you. And then now we have the market going up and up. And so I am paying attention here to Apple's intermediate demand supply zone area of 117. And the reason I'm paying attention here is because I want to see if ahead of the earnings call today during the trading session, if it is going to test that to then rip through it whenever the market does in fact finally when Apple finally does report earnings, or if it's going to dance in that area and then begin to break down as kind of is right now to possibly draw the market down lower. And so something that I did notice yesterday in the hourly time frame is that we kind of saw gentleman's rule play out. And so was it the hourly or the 15? And so what I mean by that is that there was a price retest that pretty much touched the zone 3 times ahead of it ripping. And I want to show you guys what that looks like here. Maybe it wasn't the 5 minute. And as you guys know, with every candlestick, a red candle and the 15 minute could be a green candle in the 1 hour. And so you do have to take that into the appropriate context. But here it is. In the 5 minute, we kind of saw the market retest the price twice and then kind of kiss and take off, right? Which we kind of see here. And then orders came in and then never touched that zone again. So because that did develop in the smaller time frame, and I was already looking to go long. And again, the reason I'm looking to go long is because in the markets, whenever during this COVID time, it's a tech sector that has been outperforming and leading the S&P 500 or the Nasdaq. So with that said, I am holding Apple and I am long the session because I feel that the Federal Reserve still has a lot of tools in their toolbox to prevent a seismic market crash. And also we had the report today that we have a killer Q3 earnings report. And so with that said, I did want to come on and again, kind of show you guys what I'm doing in the market right now. Nothing I say is a buy, sell, or hold recommendation. You can lose all or more of your capital trading and investing in the financial markets. I did post a video on my Instagram, which is @CapitalEndeavor, where I showed how to pretty much bank off of just your profits, right? And how to rent your profits. And we had done a vertical put spread on NIO. And so as you guys know, I invested about $400 in calls, at NIO, the $6 strike during the correction in March. those turned out to be worth over 50 times that, and now probably even 100 at this point, turning around 15 cents into about $1,500 per contract per unit. And so I let those kind of play out. I let them expire and get assigned at around 18 or so dollars, at which point about 3 weeks ago, whenever Trump was diagnosed with COVID, I then switched out again the Neo stock, or the the Neo stock, excuse me, for in the money calls at that point, to basically have a somewhat of a protective uh, line, right? So if I buy a call at, a strike of $22 for $3 for a $25 break even, if Neo were to fall to $10, the most I could lose is essentially those $3 that I spent on the actual call. So I did switch those out, and then I realized that while I waited, I wanted to sell vertical put with a better break even than what I had obviously been assigned at. And in doing so, worst case scenario, I get assigned at above where I had already taken profit, and keep on renting the time that we're waiting for the stock to play out. So with that said, guys, that's pretty much all that I wanted to come on and say today. I saw someone in the comment section ask me if I'm still trading. I absolutely am. I've just been working really closely with a group that I will hopefully be teaching with sooner than later. Hopefully you guys will see me in the group, and I'm excited to do that announcement, and it's going to be with someone I think you guys all know and love, if that does work out. But like I said, trading is still going on the up and up, just working with this group on a proper launch of the next phase of my educational journey, as I do love trading education. As you guys know, is the path of least resistance to your income and wealth goals because of liquidity, barrier to entry, and ability to cap risk. So that's it, guys. I hope this video was helpful. Look out for what happens with Apple here in earnings, and where it'll set a new supply and demand range thereafter. Sorry for the noise, getting a new mic. Anyways, guys, thank you for watching this video. Again, nothing I say is a buy, sell, hold recommendation. It includes all or more of your capital in the financial markets. And I will see you guys next time. All right. Bye.